What's up, everybody? All right. What's up? What's up? Ready for some FOMC? You know it. Yo. All right, we've got 5 minutes till the decision. You remember the decision doesn't really create a lot of movement. So it's usually the press conference, and we have a little tricks on how we trade this. One second, I'm trying to fix this like marker thing. All right, this one here. All right, so typically for FOMC, the first 30 minutes, you really don't do much. So like there's a rule, FOMC rules, right? Minute 0 to 5. There's going to be a move. Then you're going to have 5 to 30 and 30 plus. You're going to have like a medium move, a bigger move, and then a bigger move. Well, let's actually draw it a little bit better than that. You have a small move, medium move, and then a bigger move. Press conference is the one that's important. Yeah. The float for the S&P has survived, but for NASDAQ it hasn't. So anytime float fails for any one of the indices, it's considered random for all of them. So let's currently analyze what we have kind of going into FOMC decision, right? VIX is still trying to hold below this triple B level. Like this morning, it broke through and as they're trying to hold below, which is good. UVXY tried for a monthly hedge break and held in there. So we're pretty okay on that. SPY is existing in hedge pressure break today. QQQ is also existing in a monthly hedge break potential, but it survived. So things should hopefully pan out to hold today, what we should see. Decision's coming out in 2 minutes. No position going into FOMC. Yeah, I'm not expecting a big bounce in SPY either. And another thing to take note of is wherever you start before the event, we're gonna mark it, right? So exactly where the candles are ready to go, we're gonna draw a little marker here. And the minute the announcement happens, there's your mark. And so if it returns to that same spot, then it means it's priced in. It's usually almost always priced in. So when the press conference starts, we're gonna repeat the same exercise. Let's go ahead and make this a gray line so it'd be an anchor point. I'm pretty sure that our guess of 0 basis points is probably going to be accurate. The market's already getting some information. Ready to go. There it is. All right. All right. No change. 5.5% no change. All right. No change. All right, so let this market trade lower. All right. No change, tap and lower DD band. All right, so minute 0 to 5. Never do anything in the first 5 minutes. Like let it try to absorb the information and see if it's going to do anything, right? And what you do is you just kind of wait, because once Powell starts talking is where the real meat and potatoes come. Bigger picture. Well, if you look at the monthly map, you can see that it's very easy to see that the market's trying to find any excuse to sell. You can see very easily right here. The bull zone is sort of trading higher but flat, and the bear zone is sort of trading higher. So you have bears shorting and bulls kind of like having a few waves of liquidation. The market's going to try to sell. It's like an airy excuse to sell. So what does it mean for the greater picture? Nothing. This was expected. The market rose and fall right back to where it started. So it's a non-event at this point. You moved and came right back. So it means a non-event. So now the market is no longer moving on FOMC activity. If it were to move and keep going, then it's a surprise to the market. But the idea that it moved and people are immediately were taking profit after the move, and you return to the same price, it means we effectively priced in the interest rate decision already. Anytime you return to the same spot before and after an event, it's already priced in, which is pretty accurate because we were expecting this read anyways, right? So already priced in, you can take effect of that, right? So now the press conference, what's not priced in. So usually you have like a moderate move in the first 5 minutes, and then after that move gets absorbed, then you have usually a bigger move as you lead into press conference. People are now going to start positioning for the anticipation of what he's going to say during the press conference. The press conference being the unknown is the part that you're wanting to see almost like forward guidance in earnings. What's the next rate hike going to be? Immediately the market's going to start thinking about the next rate hike and try to get clues from the press conference. Let's see what volatility is doing on that. we do is we normally just wait for the press conference. We're just gonna chill here for about 30 minutes. We're just waiting for the press conference. Starts in 21 minutes. To me, people getting squeezed on the longs, or do we need no rationalized because irrationally correct? I would leave it at that. Just waiting for the press conference, so give me 1 second. I'm hanging out here for a little bit. "17 minutes. "14 more minutes." Just picking up a little bit of a downside action. Working on some marketplace work for a minute. We were busy all weekend. Feels nice to be home. Now it's time to get back to work. H3 breaks usually means that people are getting squeezed on longs. Absolutely. We're just getting in, so we got to make a quick run all the way out to Sugarland in a little bit. Then we got to go to Chinatown. We have a lot of errands we have to run today. This is gonna be a really short stream. I know I don't have a lot of time with you guys. We get 8 minutes on the press conference, and as soon as that starts happening, we just kind of take a look and see what the market's going to do after that. It's a super busy day today. But I did make a pit stop just to stream real quick. How much I love you guys. Did y'all love me? I figured I'd be here at least for Fed for at least half an hour. You can stream briefly at what we are looking at now. Right now we're looking at the time ramp up between the actual FOMC decision, the rate change decision. We came in at par on exactly what the anticipation was. It's gonna be no rate hike, no rate cut, 5.5% target rate. And we determined the market was already priced in because we moved and returned to where we started. That initial spot here to here shows that the market already priced it in. So now we're waiting for is the press conference, which shows a little bit of guidance leading into the next, essentially traders are always trying to forecast what's going to happen next. So right now, as we're trading lower, traders are actually trying to forecast the next thing, which is going to be earnings, right? So the market's catching up to today, like Microsoft selling off, Amazon, other stocks that have earnings today. Apple, Amazon, Meta. So in about 10 minutes or 5 minutes, press conference is going to be, and I got about 15 minutes after that, then I got to run again. Longer term monthly map data is that the market's bullish leading into the spring. That this week or next week, the market's going to be not so volatile, but it's going to look like there's going to be a little bit of selling pressure. So selling pressure in a bull market. The CD ratio is dropping pretty quick from 1 closer to half. So it's getting closer to that spot. Market is irrational, so any type of trading one would do from here would definitely be a gamble. It would be like put a little bit on if there's anything at all. I personally, I'm not gonna trade this one today. There's too many things already bad right now, and it's just a coin flip from here, and I don't have any evidence to pivot the market in any direction. And I got a full schedule today, so like just getting in and stuff. I had a ton of errands I have to run today. That was your long. Okay, press conference starting. Immediately get ready for some movement. This is what we've been waiting for. If you guys want to open up this right here. What a waste of time. This is, you've already made 6 trades. Silly Etch-a-Sketch. I'm out of here. You've already made 6 trades. Yikes. In the last 5 minutes. Notice how I just kind of drew like what it's kind of doing, like this. I drew this 30 minutes ago. Okay, now some bigger moves might happen, so be very careful today. Dealing trades, changing Pokemon. All right. All right, just really quick, I gotta run, but what we're gonna look at here, be very mindful today. Hedge push or break, the market is random and irrational. It doesn't look, there's nothing to pivot off of, there's nothing to trade. Any break point from here, it's gonna look for this as resistance, okay? Because that's the initial price endpoint of the Fed. I don't think we're gonna get there. We have major earnings today. I just forecast downside. Be careful on this break right here, careful. This is bad news. Bearish or bullish? Neither. It's neither right here. The only bull setup would be hedge push or break to the upside. That's the only reason that I would long this with confirmed long. Policy rate well into restrictive territory. As Powell is talking at the 30-minute mark, you can get some movement. So I'd say unless there's a break to the upside, the market is destined to be choppy inside of this range. Ideally, what I'd like to do, if I were to do anything today, I'd wait for a break in this direction, or I'd wait for a bounce here to survive the bull market, 482.5. I don't think we're gonna get either today, but it'll be a toss up. We are surviving a DD band. You know, market's good enough to want to do that, but we did have float failure, so that could be a problem. Did what, clown? Did that guy call my sketch silly? Probably. Yeah. Oh, that's what he was saying. I was just drawing that it was going to be small move, then choppy move, then choppier move. The labor market remains tight. Labor demand still exceeds supply. Activity in the housing sector is subdued. Economic data and the forecasted data doesn't really show. His commentary is bullish. His commentary is also hinting that rate cuts, in my opinion, aren't on the horizon. That they're still going to maintain the zero rate hike. I'm looking for any clues that are related to inflation, though, because that's going to be the telltale sign they're going to raise rates or not. Labor demand exceeds supply. It's a decent sign that wages will come down, which means partially inflation could come down because of this. Labor demand exceeds supply. So if you need workers, no. Hold on. I said that backwards. If the demand exceeds supply, then you have to raise the wages to get people to come in, which you go against and actually create problems with inflation. Our policy rate is likely at its peak. That's the commentary that created this green candle you're seeing right now. That's that resistance I was talking about you would hit today. 1375. Right on the dot. Right back to the start. Yep. It will likely be appropriate to begin reducing rates sometime this year. Although that is good news, I think that the market already understands that. And I think we're going to start seeing some selling pressure, attempts at selling pressure from this moment. The economy evolves as expected. We'll dial back the policy rate this year. And that's they're looking at the idea that we got the soft landing, that the economy would heal itself, something we theorized 3 years ago. That the Fed would have limited ability to control inflation with the target rate, so that they would raise rates for other reasons. But ultimately, the economy would just have to heal itself over time, and the labor market would have to heal itself. Prepared to maintain the current policy rate for longer if needed, which is hinting at no additional changes. So they're saying at some point this year they're going to cut rates, but for right now, Powell's comfortable holding the policy rate without raising rates. So this is a sign that rates aren't going to go up this year. So all the commentary today is rates aren't going to go up. As you see, the market's still selling. This looks like this is an avenue for people to want to take some profit. Although this is very, on the Fed announcement, bullish news, very bullish news, and very bullish forward-looking guidance. Reducing policy restraint too soon or too much could reverse inflation progress. So reversing policy restraint is fancy word of saying the restraint they have on raising rates, which is limiting how much they raise, reducing the limit, meaning that accelerating the pace could reduce or could reverse the inflation progress. So meaning that they're not going to make big step changes in either direction. So you're going to reverse inflation progress, meaning they would cut rates really quickly. That would create a problem. Unfortunately, this is not tradable. There's nothing to trade off of, and there's nothing to play on. VIX is trading above this 14.4 triple V level, which is going to cause unusual volatility. Fed's Powell saying we have confidence, but need slightly more confidence. At the same time, reducing the policy rate too late could unduly weaken the economy. So so it's twofold. Is reducing policy restraint too soon, meaning reducing the rate too soon or too much, could reverse inflation progress. So saying cutting rates too fast would reverse inflation, but waiting too long to cut the rates could weaken the economy. So that the combination of those two lines is very bullish. My Etch-a-Sketch was dead on. Imagine that. It always is that way. People don't understand what they're looking at. If you're going to go back and... Oh, I can't go that. Can I go any further back than that? No. So now at the press conference, we're getting a whole new move. So creating some possible red lines here. Not really tradable. If I were happy to be in a gamble long, I'd hit hedge pressure and I'd take profit right here. If I were long, I wouldn't bet any further than this. Right here would be the out. It's fast in the eval. Congratulations, Louis. Very good job. We don't think we necessarily need to see weaker growth for inflation to come down. That's interesting. Hard to wrap your head around that, but basically, inflation in its normal sense is created by hypereconomic activity. So stronger growth in the economy can create inflation in prices. So one of the theories being that weaker growth that we're having, a slow to come to economy, could on its own have effects to curb inflation as the economy is not booming as much as it can be. So he was just saying that we had very strong growth last year and that weaker growth this year could maybe cause inflation to come down. He says, we don't think we necessarily need to see that weaker growth for inflation to come down. The inflation can come down on its own already. And likely it's because the labor market conditions are there to do so. Seems likely we will achieve confidence on inflation. So there we go. Nice job on the trade. That not tradable today. Unfortunately, the dynamics are not there for good trades to happen. So we're going to call it. Thanks for tuning in. Like I said, I'm just getting everything situated here. I got to run and do a whole bunch of stuff today. We'll be around. No Zoom call or anything, but I'll be around tomorrow. All right. We love you guys. We'll see you later.